So hi everyone, welcome to our Workshop Wednesday series. This is part 2 of our financial literacy series that we wanted to provide the community with for skills to just have really good finances and banking skills. So last week we had part 1, which focused just on basics of banking, kind of a banking 101. Today we're going to get more specific into credit scores and credit reports, which we all know are very important for our finances. And so we're very lucky and grateful again to have our friends from M&T Bank to run us through this and provide this workshop for us. So I'm going to hand it off to them to get us started.
Right. Good evening, everyone. M&T Bank is happy to present to the Palestinian American Community Center the second of our 2 financial literacy workshops. As Abir noted that credit scores and reports will be the focus for tonight's presentation. It's a little meatier, so we did send a participant's guide to the center for your reading pleasure. And certainly if you have any questions after the workshop or after reviewing the material, please feel free to reach out to Gary or I. Before we dive in, a quick intro. My name is Lee Del Porto. I'm a branch manager at M&T Bank. M&T is headquartered in Buffalo, New York, and we've been around for 164 years now. We're newer to the New Jersey market, going on probably in between 5 and 6 years. I've spent the last decade working in retail banking, and I do have an education background, so any opportunity I get to be out in the market educating consumers on financial literacy, I jump at it. I'm happy to be presenting with my colleague, Gary Wishensky. I'll let him introduce himself, and then we'll jump in.
Good evening, everyone. Like Lee said, I am Gary Wishensky. I've been in banking for most of my career, and that's been too long. We will just leave it at that. Not 164 years, though, so I'm happy to say that. Like Lee, I really enjoy getting connected with the community and being able to do something different and bring a little bit of education to the community. And I too am managing a branch. So without delay, I will let Lee kick us off and jump into the program.
Okay, tonight's goals will include exploring the importance of credit scores and reports, learning how to access information about your credit score and report. Third, discuss strategies to build and improve your credit. And last but not least, identify how to protect your credit from incorrect claims or fraud.
So a lot can happen with your credit report in terms of how it affects your financial life. It really creates that snapshot of your financial habits that financial institutions like M&T, your cell phone companies, your credit card companies, get an understanding of what your credit worthiness might be. And you understanding how your credit scores work and how the credit reporting works helps you use your credit as a tool to help you make larger purchases, like, be a car, paying down debt, or, even larger purchases than that, like buying a home.
And because it's difficult to interact on Zoom, and some of you may be on Facebook tonight, I just want you to think about a few things. If you've ever checked your credit score, if you've ever requested a copy of your credit report, if you've ever used a credit card, if you've ever taken out a loan to purchase a home or a car, as Gary indicated, you might need to go to college, start a business, or for some other reason.
So basically, and I think, Lee, we're going to jump to the next slide. A credit score is really just a 3-digit rating. So it's kind of your report card, if you will, that gives a lender an idea of how likely you are to repay a debt. And there's a lot of different ways that the criteria are calculated. So when you think about your credit score, anything a lender might consider a poor score somewhere in the 600 range, 600 or below. A fair score, 580 to the 670 range. Again, those two are going to make it a little bit more difficult to qualify for loans, and if you do, you're probably going to see a little bit of higher interest rate. As you move from, say, 660 into the 740s, that's considered a good rate, a good credit rating. You might have some blemishes there. You may have some restrictions in terms of how much you could borrow, or what the rates might be. And then as you move from the 740s into the 799 range, that's a very good credit score. You're probably not having trouble getting a lot of loans. You're considered a solid, credit customer. You may have been late or missed a few payments here or there, but you're a pretty good customer. And then once you hit that 800 range, that's exceptional. That's the strongest credit, and you'll be probably seeing a much easier path to getting credit, and seeing some of the most favorable rates when you're looking at the pricing. But one of the things that a lot of folks struggle with is, what if you don't have any credit history at all?
All right, many people, especially young people or people who have recently immigrated into the country, have no credit history. That's not necessarily a bad thing. It's not the same as having bad credit. However, you will face difficulties obtaining money when you need to get to the next step. There are many steps you can take to build your credit, and we've listed 4 of them here. The first step is opening a line of credit. This could be a credit card through a bank or a department store, or a small loan that you can repay on time and in full. There are also special products called secured credit cards. Not all financial institutions have them. M&T does. They're specifically tailored to help people build their credit. And what makes them secured is that the consumer would open up a savings account, for example, put $200 in it, and then the credit limit on the secured credit card is $200. The savings account acts as collateral to your credit card. Once you responsibly use your secured credit card, sometimes as little time as 6 months, you'll graduate to a true bona fide credit card that's unsecured at that point. The second one is request that your payment history be reported. So if you're paying rent or utilities, you can request that your landlord or PSE&G, whoever your electric and gas utility is, that report your payment behavior to the credit unions to help build your credit. Number 3, this is an optional strategy. You can open a joint account. You may request a family member that has established good credit to be on a credit application for you. Just remember, your actions will affect their credit though. So if somebody's kind enough to co-sign for you, be aware that your behavior will affect their credit. And conversely, if you decide to help somebody out and co-sign, your credit will also be impacted by the behavior of the person you're co-signing for. And then step 4, pay all your bills on time and in full, every time. Don't miss a payment. If you think you're going to miss a payment, contact the creditor and see if there's payment options. Most creditors will work with you if you have circumstances that are prohibiting you from being on time. All right, so how does your credit score affect your daily life and your ability to achieve your financial goals? Gary's going to take us through a scenario that illustrates that.
So we've got a tale of 2 friends. We are going to meet Anna and Bella virtually, like we meet a lot of people nowadays. So Anna and Bella have been friends since middle school. They both have cars and steady income to pay their bills. Anna has a credit score around 530, while Bella's in the 700s. They decide to buy homes. One of them receives a loan without any trouble. Unfortunately, the other has a difficult time getting the loan. When she finally gets her loan approved, her interest rate and insurance premiums are much higher than her friends. So now that we know a little bit about Anna and Bella, let's figure out, kind of who's who, right? So in terms of, the better credit score, obviously that's Bella in the 700s. The higher the credit score, the better. Anna probably had the trouble getting the loan, as people with lower credit scores, and as we reviewed earlier, kind of that under that 600 level, definitely is considered poor. They have the trouble getting the loans, and even though there may be other factors to consider. Anna probably has that higher rate too because of her score. The insurance rates are higher. Again, Anna, reflects on, her credit score reflects that she has a bad payment history, resulting in higher insurance rates. So on a day-to-day basis, Anna and Bella may have bought similarly priced homes, but Bella is probably paying a lot less than her friend Anna, and that all creates to your daily life. So credit scores are not the only factor that lenders consider. Obviously there's market, down payment amounts, loan terms, loan policies depending on the lender, and those all can factor into the cost of the loan. But in general, the credit score is typically one of those guiding factors that come into play. So it certainly affects the ability for Anna to get her loan, and the interest rates that she pay. They can affect your eligibility for renting an apartment as well. Landlords, like Lee said, you can request your landlord to report to credit. Many landlords, if not all landlords in today's environment, does do a credit check, does do a background check in terms of understanding if you pay, and your credit score, again, gives that, likelihood of paying your bills on time. So, other areas, getting the car loan or a car lease, again, your payment being on time and how much you qualify for and what you then can afford. In some cases, getting a job is affected by your credit score. Employers may check job candidates' credit scores to learn more about their reliability. And, that would go into, that could go into a factor of you getting a job. And then again, if you do get the rental and you may be paying the higher rent or you're paying the higher mortgage, setting up utilities or phone services, sometimes it can be harder to get those accounts set up. Whether it be the internet, the electric, whatever it may be, in your name if you have bad credit. So essentially any person or organization that you're seeking credit from can review your credit report and ensure that they're lending to responsible borrowers. So again, managing that credit report and being aware of it is very important. So much depends on that score. So who actually comes up with the credit scoring system? Lee's going to kind of jump into the different credit bureaus now.
There are 3 credit bureaus in the US. Most people out of banking aren't really aware of them, but they are called Experian, Equifax, and TransUnion. They, along with lenders, use their own version of the FICO or Vantage credit scoring model. The bureaus keep track of your credit history separately, so it's a good idea to utilize each one. If there are large variations or discrepancies among the reports, you should get in touch with the bureaus to figure out what's going on. Credit scores may also be different depending on the financial product you're applying for. For example, mortgage applications may yield a different score for you than if you're applying for a credit card. So let's talk about how credit scores are calculated. There we go. All right, so as mentioned, there we go, right? Calculating a credit score. So as we mentioned earlier, Different credit bureaus calculate your credit score in different ways. While the bureaus don't disclose the exact methods or formulas that they use, we do know the general factors they consider. The most important factors that affect your credit score are your payment history and the amount of debt you owe. All right, so the top two are the most important. Let's take a closer look at these two factors. Payment history primarily includes looking at whether or not you pay your bills on time. We can't emphasize that enough, right? Pay your bills on time every time. Do you always pay at least the minimum amount? If you do, then you're in good shape. If you make even one late payment though, it will likely have a negative impact on your credit. That's why it's so important that you always pay your bills on time and pay at least the minimum amounts when you do so. Now, the amount owed, another big piece of the pie here, depends on two factors. How much you actually owe on your credit cards or loans. Owing money doesn't necessarily mean that you're at risk to lenders. The most important thing is showing you make regular payments, on-time payments toward your debt every time. By the way, if you have an authorized credit card user on your credit card, like I have my son on my personal credit card, the way he uses the card will affect my credit history. It'll affect his and mine. So be wary when you're having authorized users on your cards. A lot of families do that because it's convenient, but it will have an impact. And then also they look at what percentage of the available credit are you using. Typically people who are using less than 30% of their total available credit would be a lower risk for a lender. So if you have, $20,000 on credit cards between two department stores and a major credit card, and you've got them maxed out, that's not a great thing. You try to keep your credit 30% or less of your total credit. Maxing out your credit cards can absolutely impact your credit score negatively. So down here, the length of credit history plays a part, right? How long you've been managing credit. New credit or credit that you've recently applied for accounts for a smaller part of your credit score, but it does. Each time you apply for new credit, a lender is going to run your credit score, and that'll give you a ding on your credit. These are signals to lenders that you may be using too much of your available credit. There are some limited exceptions to this. For example, if you're applying for a mortgage to buy a house in a short period of time, it doesn't affect your credit score negatively. But if you apply for a credit card, it will give you a little bit of ding. And then types of credit is the last component to calculating a credit score. It's a smaller portion of the score, and it depends on the types of credit you have. People with mixed credit, like credit cards, an auto loan, and a mortgage, that have slightly higher scores than people that don't. So a little diversification in your credit picture is always a good thing. Okay, Gary, transition us into the complexity of credit scores.
Okay, so credit scores are extremely complex, and your actions and everyday decisions can influence, obviously, a lot of your finances. So how about someone else's actions? Can they affect your credit scores? So many people think that co-signing on a loan is helpful action to take, especially if the person is, a child, significant other, parent, family, close friend. Similarly, married couples or people in long-term relationships decide to merge their finances. And it's really important to know how these decisions affect your own credit. So you should always be asking yourself the following questions. Have you ever co-signed a loan or asked someone to co-sign a loan for you? Have you ever signed a joint credit application with a spouse or other family member? And have you been added as an authorized user on someone else's credit card or added an authorized user to your own? If you look at those scenarios, we'll look at, we'll go back to Anna and Bella now in terms of how this affects them. So Anna's house is now in foreclosure. She's taken some steps to improve her credit and is now eligible for a loan. Anna wants to use the loan to try and stop the foreclosure process, but she has a problem. She needs someone to co-sign. Should her best friend Bella co-sign a new loan with Anna? And how would that affect Bella's credit score? If we really think about it, while they may be friends since middle school and they're well into their adulthood, no, it doesn't mean that it would necessarily impact Bella's credit score, but it is going to appear on her credit. Now, when you co-sign a loan, you are taking the responsibility. You're promising to pay the loan for the other person if they default, if they don't make their payments. So if Anna pays off her loan on time, it could actually help improve both Anna and Bella's credit scores. If she doesn't repay her loan or she misses payments, it then, falls on Bella's shoulders and it affects both of them negatively. So when you think about that relationship, really understand, the long-term impacts. So as we move into the cost of sharing credit, Lee, you want to move us to the next slide?
Yep.
So Michael and Tamika are getting married in 2 weeks. They're having a nice COVID wedding now. They're thinking about merging their finances by opening joint checking account and applying for a joint credit card. Tamika has a good credit score, but Michael, he doesn't. So should they sign up for joint credit? Maybe. Ultimately, it is an individual choice. Merely having a joint account doesn't affect your credit score. Tamika's credit score could be negatively affected if Michael is in charge of paying the bills and starts paying them late. So it could affect her negatively. It could affect her ability to borrow since she might now be considered higher risk. Many couples, will still do joint accounts because it's just more convenient. It's important to remember that even if a couple merges their finances, they still have their own individual credit scores. They will not receive a joint credit score. So in this case, Michael's credit score may not negatively affect Tamika's credit score, but it could negatively affect Tamika in other ways. They may receive like we mentioned before, higher rates on a car loan or a mortgage or a home equity loan, because lenders may evaluate both of their credit scores to calculate the risks of lending to them as a couple. But it's not always the case, as some lenders may only look at the highest score or the lowest score, or they may merge both. Again, lending is a very individualized piece, so it's important to be aware of, what your partner's credit could, impact you in many different ways. So applying for credit on your own or with someone else can affect your credit score. Be mindful of your own score outside of everyone else before making any decisions to co-sign a loan or merge accounts with someone. Their actions, like not paying back a loan, can damage your credit. Also, their credit score can affect the cost of financial products for both of you. Adding an authorized user to a credit card is also a common way to share credit, like Lee mentioned before with her son. But keep in mind that the primary cardholder is responsible for paying those bills. That's Lee. If you both use the card responsibly, it can increase both credit scores. However, adding the authorized user can be a risk for the primary cardholder if the other user is overspending.
All right. So what is a credit report, Gary? Keep on keeping on.
Yeah, we will keep on going here. So we've talked a lot about scores, but what about credit reports? Are they different? So your credit report is really just a snapshot of your credit profile. It includes your history. Every time you take out a personal loan or apply for a credit card, those actions kind of appear in your history. It's important to review your credit report regularly. It's one of the tools that help build and maintain credit. In New Jersey, you can get a free credit report every year, so you should certainly take a look at that. There are 3 nationwide credit reporting organizations, as we already talked about. So we've got Experian, Equifax, and TransUnion, and they calculate your score based on the factors that we've already discussed. Many people wrongly assume that checking their credit score or report will negatively affect it. It's not true, and you can see that a lot of places now will offer you kind of a way to give you a glimpse at your credit score. So being able to use some of those tools, keeping an eye on your credit is a great way to, it helps in many ways. It helps detect fraud and maintain or work towards getting a better credit score, which we've already discussed all the benefits that can happen there. So getting 1 free credit report from each of the 3 credit reports per year, you can do that by online or on the phone. You can do that online at the annualcreditreport.com, which is the only website that is federally authorized to give you your credit report for free. The Federal Trade Commission maintains that. You can also request your credit report, a little tongue twist there, for free via telephone at 877-322-8228. And if you have any help, feel free to reach out to Lee or myself. We can certainly help direct you. New Jersey also has some tools via their website that can help you out there. Because you can only request your Equifax, Experian, or TransUnion credit report for free once a year, think about spacing out your requests to maintain an eye on your report. So you could do that, pretty much, every 4 months. But again, using online tools like Credit Karma or, some of the other tools that are out there through some of your credit agencies can also help you to help monitor that. So being able to use that free credit report, actually, I just was dealing with a client who thought he had some fraud happening. He had some identity theft. And one of the first things that we discussed was going to his credit report to take a look at if anything had been opened up. So, being able to use that free credit report in cases of fraud. Some folks need to apply for welfare programs or things like that. You might want to, be able to look at your credit report there. Or, if you get denied for a loan or a credit application, might be a good, that may, pique your interest as to, hey, what's on there and what's showing up. So, you can qualify for more under certain circumstances. So, again, if there's the fraud, the denial of credit, unemployment, and welfare, those types of things, you may be able to qualify for more than just those 3 free per year. So when your credit score, does that show up on your credit report? Credit scores, unlike your credit history, are not currently included in the free reports. So you can get your credit score by requesting it from various companies, including the credit bureaus. Everybody charges a fee. But once you've requested and you've received your free credit report, how do you make sense of it all? Lee, why don't you help make some sense out of what the credit report looks like?
All right, your credit report is going to contain the following information. Down here is your personal information, like your name, your birth date, your social security number, your address, the name of your spouse and or your employer, public records such as lawsuits and bankruptcies, any judgments against you, delinquent or unpaid taxes will show up that are in public record, will show up on your credit report. Your credit accounts themselves. This section really contains the information about your debt and whether or not you've been paying your bills and loans on time, which we can't re-emphasize enough tonight. Or, if you've been missing the payments or at risk for delinquency. And it also includes information on both open and closed accounts. Like when I pull my credit report up, you know, when I was younger, I had a lot of department store credit cards to build credit. And then as I got older, I really just wanted to consolidate the use of credit cards to like 2 or 3 major financial institutions. So I closed those department store credit cards, and they still do appear on the credit report. And then last but not least, credit inquiries. Organizations, people, or agencies that have requested to verify your credit in the past 2 years will show up. So if you apply for a credit card, you'll see that application ding on your credit report. There is some information that's not included, such as like your medical information or information about religion, race, or sex. That's not included on your credit report. Information about your checking and savings accounts is not on your credit report. However, banks do run a different report before you go into a financial institution to open an account. It's a different system. So even though your checking and savings doesn't show up on your credit report, you still want to maintain them responsibly and take care of any overdrafts and not leave an account lingering with an overdraft on it, because it will impact your ability to bank at a different financial institution. Any information about your debit or prepaid cards will not be on your credit card, and private loans that you received from benefactors, friends, or family. So requesting and reviewing the information on your credit report is the first step, as Gary said, towards maintaining and building a healthy credit for all the reasons that Gary went over. But there are some important things to look for in addition to that, and Gary's going to review what those important things are on your credit report.
So again, like Lee said, we want to make sure that when you're looking at your report, make it regular. You know, you want to do that. You want to make sure that it's accurate and up to date. Your credit report contains a lot of information, has your personal information about you and your credit history and how well you're managing your debt. So it can also be affected by public records such as bankruptcies, unpaid debts, bills, how much of your available credit that you're using. Most of this type of information can remain on your credit report for up to 7 years. Bankruptcies can remain on your credit report for up to 10 years, and certain tax liens can remain indefinitely if they're not paid off. So, you know, being able to look at all of that. So some specific things that you definitely want to look at: the date that your account was opened. Remember that the length of your credit history is a good part of your credit score. So making sure that opening or closing dates on your account are listed correctly. You know, it's also important, you know, if you did close an account, you know, that it reflects shortly thereafter. You don't want to have that lingering out there. So being able to review that information. If there was a delinquency, be aware of it. You know, does something on the report say that, oh, you were delinquent in July of 2021? Oh yeah, you know what? Yeah, I missed that payment on that credit card that one time because I was on vacation and my my bill pay schedule was late that day. You know, dates of public records. So you know, you don't you want to make sure that legal activity is erased from your report, you know, in that 7 or 10 years. You know, if you have any of those judgments, and then dates of credit requests. Whenever anyone, a lender, a financial institution, employer, a homeowner requests your credit report, your credit score may be affected. So check those dates when, you know, that they correspond with, did you go rent that apartment in July of 2021? Buy that house in July of 2022? You know, so you want to make sure that all of that, you know, correlates and that it stays accurate. You know, if you've noticed any errors, you definitely want to dispute those errors with the credit bureaus. And some people choose to work with credit repair companies. But before you do, it's good to know some of your rights. So Lee, why don't you tell us a little bit about those rights?
Okay.
Or maybe I will.
Yeah, you're on still.
Okay. I'm still on. So again, like I said, reviewing everything is a good practice. You come across the information that's incorrect, we want to take the action. So credit repair companies will offer to fix your credit for a fee. However, know that the Credit Repair Organization Act prevents credit repair organizations from engaging in deceptive practices such as false advertising that can cause you harm. It requires these organizations to be transparent about what they can do for you. So in other words, credit repair organizations may not overpromise. For example, to delete all bad credit, irrespective of whether it's legitimate debt that you have accrued. Also, credit repair services cannot demand advance payment. They must put all their contracts in writing, and they must offer consumer contract cancellation rights. So your rights as a consumer are protected, but what can you do if you do have bad credit? Let's take a look at that. And I think now Lee is going to take us through this one.
Okay, so steps to repair your credit. Repairing your credit means that you'll have to take a hard look at your finances, bills, and your spending habits. As you know, unpaid debt, tax liens, and judgments, these are all things that negatively impact your credit score. But what can you do to repair your credit score once it's been damaged? All right, so let's look at step one. Right, it says, begin making on-time debt payments. Contact your lender if you need help creating a repayment plan. We spoke to this earlier. Most creditors will work with you. So contact the credit reporting agencies and inform them of any errors or false entries. Include your credit report, list the items that are disputed, and clearly state the reasons you're disputing them. Again, sometimes it could be like fraud on there. You need to clean that up. It's a lot of legwork, but it's imperative that you clean it up. Include copies, not originals, of any documents that support your request for correction. Mail this request via certified mail with a return receipt to ensure that it's been received. The credit bureaus are obligated to respond to you usually within 30 days. However, if you decide that your dispute is based on unfounded claims, they may not do so. Make sure you include the supporting documentation for your request. Okay, at the same time, right, step two, you need to contact the company that provided the information to the credit reporting bureaus and inform it of any errors. The company could be a credit card company, a financial institution, or an employer that denied you service based on information in your credit report. Include the same information that we spoke about before, a copy of your credit report, a list of the items you're disputing, a clear statement of your reasons for disputing it, and copies, not originals, of any documents that support your request for correction. All right, preventing fraud and fixing incorrect information are important reasons for reviewing and checking your credit report regularly. But what happens if you've experienced an unexpected life event, such as a bankruptcy or a divorce? Let's find out. So if you've been through a bankruptcy, foreclosure, or divorce, there are steps you can take to reestablish your credit. They are very similar to how you establish credit from the get-go, right? Monitor your credit reports and scores, pay your bills on time and regularly, get credit counseling, and consider financial products. So, as discussed, getting a secured loan or a credit card can help rebuild your credit if it's been impacted by special circumstances such as divorce. However, there may be a trade-off, such as fees or minimum deposit amounts. That's a $200 in a savings account we spoke about. Sometimes a secured credit product comes with a fee, but it's money well spent if it's going to get you on the road to recovery. Okay, and then how can you identify scams from credit repair companies? Okay, right, nope, it's never easy, right? We talked about companies that help you repair your credit, but in every walk of life, there are unscrupulous characters. So Gary's going to talk about how to be mindful that the company you're dealing with is a credible company.
So let's get back to Anna. Poor Anna. We feel bad for Anna. She's been unable to pay her mortgage, and her house has fallen into foreclosure. She researched several credit repair companies, and let's see if we can help her recognize the good one from the bad one. So we are going to walk down this journey with Anna now. So the first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna's worried about her bad debts, but the company assures her that it can scrub everything from her report. And the company also advises Anna not to contact any of the credit bureaus directly, since doing so will negatively affect the company's efforts. So there's a few red flags in this scenario. They promised to remove the bad credit from her credit report and required her to pay some upfront fees. That's a huge red flag. Those are not things that we talked about before. Those are not things that they can promise. So they are in violation of that consumer agreement that they're bound by. So Anna definitely should not trust the company's promise to remove her bad credit. And according to the Federal Credit Repair Organization Act, credit repair companies must successfully remove credit inaccuracies from an individual's report and provide proof that the report has been changed before they can request payment for any services. And it can take up to 6 months in order to do that. So obviously, paying that upfront fee is definitely a red flag that Anna should be avoiding. And Anna was also worried about that some of her bad debt would continue to bring her credit score down, but the company assured her that it would remove all of her bad credit, including the items that were legitimate. Again, Anna should not be moving along with this company because if that negative credit information is legitimate, they can't remove it. And there's nothing that they can do. Credit repair companies can only remove negative credit information that's incorrect or result of a fraud or identity theft, which is also kind of covered in that fraud piece. If a company requires you to claim that accurate information is false, that is a huge red flag there. And the fourth one, they requested that Anna does not contact the credit bureaus directly, and they said that could negatively affect their efforts. Again, this is a huge red flag, and Anna needs to find a different company to deal with there. So, spotting the red flags, in banking, we say it a lot with our teams. You have to trust your gut. Being an educated consumer is definitely, the know what your rights are and know what you can do. So, again, they cannot require upfront fees. They can't promise to remove all negative information. They can't scrub or alter any legitimate information that's reported, and they cannot instruct you to avoid contact with the credit bureaus. So, some of the other things that you should be on the lookout for, if you're ever working with a credit repair service, never sign any blank paperwork. And that's not just with a credit repair service. That's in anything with anything that you're signing. Please don't ever sign blank paperwork. Credit profile number scams, promises of new credit identity. If it's too good to be true, it is. And then fake social security number scams. Any agency that encourages you to use a fake social security number or apply for an EIN number, all of these are huge red flags. Your social security number is your social security number, and you should not be, tampering with any of that. Credit repair companies can help you spot and remove incorrect, fraudulent information from your credit reports. There are good ones out there. Don't believe that they're all scammers. Credit counseling agencies can also help you improve your credit. So Lee is now going to kind of take us through some of those services.
So if your credit report is poor, you may consider taking advantage of the credit counseling services that Gary just referred to. Many agencies offer a free initial session, and these agencies may help you create a financial plan to decrease your debts overall. So it's not just the credit repair, it's the going forward piece. If you choose to use credit counseling agencies, look for agencies that are accredited with either the National Foundation for Credit Counseling or Financial Coaching Association of America. Look for services such as better money management, right? Things that are not just like a Band-Aid to get that support going forward. Debt reduction strategies. We work with customers all the time on debt consolidation to make payments more manageable. And bankers can also help you with this. So if you ever need advice and guidance, feel free to reach out to Gary or I. We'll be happy to help you out. Getting information also about the services of these organizations and possible fees before paying anything or providing private information is always a good idea. So we covered a lot of things tonight, guys, and I know that we moved pretty quickly. And like I said, there's a participant's guide available that you can go back and review at your leisure. Just some strategies as we get closer to closing tonight to improve your credit. Remember, use less than 30% of your available credit. Use it wisely. Don't max out your credit cards. Pay your bills on time. We must have said that 3,000 times tonight. Pay off your credit card bills each month in full, if possible, or at the very least, the minimum payment. Pay off your loans on time. Do not apply for multiple loans and credit cards at the same time in a short period of time. It will ding your credit and it'll plummet. Make a financial plan or a debt management plan to reduce your debt. And that's some of the debt consolidation I just spoke to that bankers routinely work with our customers. So don't feel like alone in this. Many people need a little guidance on how to get on the right track in terms of managing their debt and their credit. Create and follow a monthly budget. We're also happy to help you with budgeting as well. And we do budgeting workshops if there's interest in the future to drill down on budgeting in particular. And we've spoke about this at length tonight. Review your credit report for accuracy for a multitude of reasons. You know, it could be fraud. You just want to make sure it's accurate because everything on there will impact your ability to obtain credit. The cost of credit will be impacted by what's on your credit report. So take advantage of that free credit report each year from the 3 credit agencies we spoke about. So being mindful of your spending and monitoring your credit are all good habits. We hope that we've emphasized tonight. They'll help develop and build and maintain your credit. So we're a few minutes away to wrap up. I'm going to let Gary wrap us up with our summary of tonight.
And you know, Lee, just to touch on one of the points that you just made, if you go back to even last week, we had a conversation last week about the difference between a want and a need. Yeah. When you're talking about your budgeting and your debt management skills, you know, a lot of that comes into play. So why the basics of banking really does, you know, tie into this specifically. So again, you know, we've talked at length tonight. Your credit score is really something that can affect your entire financial life and really your whole life. So make sure you take good care of it. A good credit score can certainly help you achieve more of your financial dreams. If you have a bad or a poor score, you know, don't lose hope. You know, there's definitely, you know, ways to improve it. Keep track of your credit reports on that regular basis. Adopt responsible credit habits so that your credit score can continue to rise towards that, 850s are a lofty goal, but being able to try and get into that 800s is always a good thing. It can be an uphill battle at times, and it may seem that it's taking longer. Making small changes, the difference between a need and a want, can certainly have a big payoff later. And leveraging your partnership, your financial partners in your local banks. Obviously, we're happy to be that partner, to help guide you along your way. And I think that wraps us up for this evening.
It does wrap us up, and it was a lot of information in a very short time. So please take advantage of the participants guide, because it's all there in print for you visually to go back and review. Credit's a huge part of your life. It really is. So I hope you found tonight valuable and useful, and we're happy to be part of your community this evening.
Thank you so much again for doing the workshop. I do have all the materials too, so if anyone needs them, I did email them out also, but if anyone is watching or tuning in and wants them, feel free to reach out to us at PAC, and I'll make sure to pass those along too. Thank you again, Lee and Gary, for both of the sessions, and hopefully we'll stay in touch and we can do more for the community also.
Absolutely.
Looking forward to it.
Guys.
Bye.
Have a good rest of the evening.
Have a good night, folks.